Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Welcome back, ladies and gentlemen. This is going to be a wild one. This is part one of a two-part series, because what we just saw happen in the crypto markets in the last 72 hours isn't just volatility. It's history repeating itself with precision you wouldn't believe. Billions gone in hours, fortunes erased, charts bleeding red across the board. And yet in the middle of all this chaos, something quietly powerful is forming beneath the surface. XRP holders, listen closely, because this right now could be the last time in history that we ever see XRP below $3. The last few days have felt like the financial equivalent of an earthquake. One moment we're watching a stable sideways chart, XRP hovering around $2.60, and then next it plummeted like a falling knife, 260, 220, 180, and then what felt like a blink, $1.20. That's not normal market behavior. That's precision. And if you've been in this space long enough, you know when something smells engineered. This wasn't panic. This wasn't random. This was a reset, a purge of over-leveraged traders so clean it looked orchestrated. 20 billion gone, vanished from the market like it was never there. And yet as smoke cleared, liquidity pools started forming again. Those with diamond hands, those who got in low, those who understood, they saw what was really happening. Now let's talk about the elephant in the room. Political catalysts. You saw the headlines, tariffs, global trade tensions, leaders tweeting things that could move billions in an instant. But here's what nobody's telling you. These events don't move markets by accident. They're used as triggers. Think of it like 1929 all over again. Back then, a few powerful hands sold first, crashed the markets, and then came back to buy everything at a fraction of the price. Fast forward nearly a century later, and the same playbook is running, only faster, digital, global, algorithmic. We're watching the new age of market warfare. Tweets, statements, and narratives that act like loaded weapons aimed directly at your emotions. Retail panicked, sells. Institutions buy. That's the rhythm. That's the game. And XRP, it's not just caught in the crosshair, it's being positioned. Here's what they don't want you to realize. The liquidation events aren't random storms. They're coordinated weather systems designed to wipe out the overconfident, spook the newcomers, and give whales discount entries. Picture a poker table. Retail traders are the ones sweating, holding weak hands, while the institutions sit there calm, calculating, waiting for the right moment to shove all in. And when they shove all in, it's game over. XRP's recent flash crash wasn't chaos. It was preparation. A market wipe designed to reset leverage, clear the path, refill the liquidity zone for what's coming next. A full-scale reversal. Here's why XRP matters more than any coin in this setup. It's not just a token. It's infrastructure. Ripple's network is quietly connecting the plumbing of the future financial system, bridging currencies, nations, and digital assets into one interoperable flow. When you zoom out, you start to see every global liquidity event, every regulation update, every market shakeout. All roads lead to liquidity control, and XRP was literally designed for liquidity. It's like we're reliving the 1971 moment when the U.S. detached from the gold standard. Back then, people didn't realize they were witnessing a shift in global power. Today, it's happening again, only this time it's digital. Let's talk numbers. The recent 20 billion liquidation wasn't just a record, it was a transfer. Wealth doesn't disappear in markets, it moves. From the impatient to the patient, from the emotional to the strategic, from retail to institutional. This entire circus, as some are calling it, is exactly what history shows us before paradigm shifts. In 2008, it was housing. In 2000, it was tech. In 1929, it was stocks. Every time those who held conviction through the crash, those who understood the mechanics, came out owning their future. So ask yourself, when XRP dropped below $1.50, who was really panicking and who was quietly accumulating? Now let's look at the data. On-chain metrics are flashing something we haven't seen over a year. Accumulation spikes, wallet concentration rising, and exchange reserves dropping. Translation, the smart money's getting ready. Every previous XRP rally has followed the same path. Volatility led to capitulation, led to quiet, accumulation led to explosion. Right now, between the third and fourth phase, and the setup looks eerily similar to what we saw before Bitcoin's 2020 reversal, when everyone thought it was dead, right? Before it tripled. If you understand patterns, this is a signal you've been waiting for. Let me take you back to 1973. The world was in chaos, oil crisis, inflation, uncertainty. And yet, amid the panic, one group of investors started buying something nobody cared about, energy companies. A year later, oil tripled in value, and those who saw the setup became legends. History doesn't repeat, but it rhymes. Today, XRP is the ignored energy of digital finance, powering liquidity between nations, institutions, and payment rails. Nobody cares until it ignites. This is that moment, the ignored accumulation phase that becomes folklore later. What's happening right now isn't just financial, it's psychological. They want retail to quit, to sell in exhaustion, to believe that the crypto is done. Because when you're scared, you're predictable, and predictable people are profitable targets. The entire narrative from panic headlines to exchange glitches is designed to do one thing: drain your conviction before the big move. But if you've been here long enough, you know better. You've seen it before. 2020 crash, FTX collapse, Luna meltdown. Each time they said crypto's finished. Each time it came back stronger. So what's next? The reversal. Not about hope, it's about structure. XRP has cleared liquidity zones that took months to build. Price suppression only lasts as long as confidence does, and confidence is shifting. We're entering the part of the cycle where disbelief meets opportunity. That's the sweet spot, the legendary zone, where fear is high, prices are low, and narratives are toxic. That's exactly where generation wealth begins. Because when XRP reverses, and it will, those entries under $3 will become the modern-day equivalent of buying Apple in 2003 or Bitcoin under 1,000. But here's where it gets deeper. There's a reason why the biggest institutions of finance are quietly aligning with Ripple, even during market chaos. There's a reason why new liquidity corridors are being built while prices tank. They're preparing for the next phase, the massive reversal that will redefine how global capital moves. And when that move hits, there won't be time to react. You'll either be in position or you'll be priced out. Because as history shows, whether it's 1929, 1971, 2008, or right now, the greatest transfer of wealth always begins in silence, chaos, and disbelief. If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay tuned for part 2.